We feel very confident about these numbers. Not only did we outperform our own guidance in first half with an organic growth of 11.2%, but we also increased our full year guidance to 9 to 11%, which is significantly higher than the long-term guidance and also the guidance we gave for in the beginning of the year with 7 to 9. I would not overestimate the EBIT performance in the first half. First of all, we had a one-time impact last year with a litigation that we have won, and so we had a significant one-time impact. And secondly, as you know, we generate 40% of our turnover in half year one and 60% in half year two. As the price increases have their major impact in half year two, we are confident to achieve the EBIT improvement that we have announced, and the guidance is at the lower end of 20 to 40 basis points.
Pricing is always a surprise when it comes to Lindt Sprüngli. Your ability to wield some sort of pricing power here to pass on the price increases, whether it be from cocoa prices or other input prices. What's your ability, what does your visibility look like in continuing to be able to do that?
Look, we had to increase prices by 15.8% due to the record high cocoa prices. And it translated into an organic growth of 11.2%. So this means we had a volume mix decline of 4.6%. And I think this is rather moderate, especially when we see the different regions. We could see that in Europe with a 17.7% organic growth, we saw a very limited price elasticity. When it comes to North America, where we are faced with a very weak consumer sentiment at the moment, we saw a higher price elasticity. At the same time, we get encouraging figures from market research when it comes to the sell-out figures. So the sell-out figures are significantly higher than our sell-in figures. This shows also that the retailers are not yet confident that we can charge these high prices to our consumers. But with the market data, I think they gain this confidence, and this is why we expect significantly better performance in the second half in North America as well as in the rest of the world.
Mr. Lechner, I do want to take you back to the cocoa prices, though. They were at a record high earlier this year. They've since come down, but to what extent is it going to be a key driver of cost inflation going forward? Do you have your crystal ball out here?
Well, they came slightly down, but we have to mention that they are still more than twice at the level of the long-term prices that we have seen before. With our hedging policy, the impact will be seen only in the future. So not even for 26, we see a decline of the cost structure here. I don't have the crystal ball, but all our experts tell us that for the next harvest, they see a surplus. On the one side, the crop should be good. On the other side, the demand is declining. The global chocolate market came down by 5% in year to date. So this has an impact on the cocoa price, and we are optimistic that the cocoa price should come further down in the months and in the years to come.
Mr. Lechner, let's get back and talk about the U.S., a hugely important market for you. When it comes to the tariff impact, you've mentioned to me before that you produce almost everything that you sell in the U.S. locally in the U.S. So from that perspective, you're pretty much insulated. However, the secondary effect might be larger, and you alluded to the weakness that you're seeing within the U.S. consumer. Can I ask you, though, are you also seeing that weakness when it comes to the increasing premiumization? Because it seems as though this is the little luxury that consumers, even in hard times, are willing to pay up for.
That's exactly what we also observe. So we gain market share in the US, and that's confirming our strategy. We gain market share in volume as well as in value. It's unfortunately not yet reflected in our sell-in figures, as mentioned before, but therefore we believe that the premiumization also in the US market will continue. And we are optimistic, as mentioned, that we even see an acceleration in second half of 25. Why? Because we are just rolling out our successful Dubai-style chocolate in North America. We started in a couple of weeks ago with the rollout under Lindt. Ghirardelli will follow, and also Russell Stover will offer a Dubai-style product. So this should also give us momentum in the second half.
When I last spoke to you, you said you were surprised by how well the rollout of the Dubai chocolate has done since last fall in Europe and across the world. Now you're rolling this out in the U.S. Does it have staying power? Do you still see the continued strong craze, the demand for the Dubai chocolate?
Absolutely. So we see the repurchase rate of Dubai-style chocolate, which is in line with other long-standing brands. We also can say that in Europe, the product is on shelf or in and out on displays since January 25, and we do not see a drop in consumer demand. It is on a stable base. Of course, initially there was this big hype with long waiting lines in front of our stores. It has normalized a bit, but it is on a very stable base, and we also see it as a product for the years to come. In addition, we also create consumer pull by doing advertising. We make above-the-line advertising, but we're also very active in social media. We have a field pipeline with innovation. We extend the Dubai-style chocolate also into the seasons. So I think we have good reasons to believe that this is a product group which is here to stay.